Hello and welcome. You're watching the exclusive conversations on budget 2022-23. And now I have a very special guest with me, Ms. Radhika Gupta, Managing Director and Chief Executive Officer, Edelweiss Asset Management. Welcome, Radhika.
Thank you.
Radhika, what's your first take on the budget? How do you rank this budget from on the scale of 10?
Oh, I don't like to rank budgets, but what I would say is I think it's a business as usual budget and it's appropriate for the times. It comes in the context of robust markets, an economy that is recovering but has not quite recovered out of COVID, and also a precarious global situation in terms of rising rates. It does nothing to upset the apple cart, which is very, very important. It says the right things in terms of being very focused on growth, focused on manufacturing, focused on infrastructure, and it doesn't do anything adverse on taxation, which is always, a good thing.
Radhika, Capex of 7.5 lakh crore versus Capex of 5.5 that we had in FY22. How do you see this? I mean, it's increased focused towards the supply side than demand.
Absolutely, and I think call of the hour, probably one of the most important lines of that speech and facets was the clear focus on capital expenditure. I think that was what the market and everyone was asking for because capital expenditure ultimately has a multiplier effect in terms of job creation, in terms of working towards the lower half of the K section of the economy, which hasn't quite seen the recovery that a lot of large corporate India has seen. So the multiplier effects of capital expenditure are very large, and it's absolutely the need of the hour.
The much wanted, what exactly was wanted from the budget is the job creation. Do you think that the budget has addressed this segment? Enough has been done for job creation.
Yes and no. I think it is addressed implicitly because mentions were made to it in the context of manufacturing, PLI, all these things are things that will spur job creation. Infrastructure spend will finally lead to job creation. Capex will ultimately. So as I said, from a multiplier effect and indirectly, I think mentions were made. Was an explicit mention made, that perhaps some people were looking for, was there a talk of an urban equivalent of Manrega, for instance? No, but the implicit mention was there.
So how is the mutual fund industry really welcoming this budget? I mean, are you happy?
I think there's nothing for the mutual fund industry to be unhappy about. I think we have, the last 18 to 24 months have been fantastic months for the mutual fund industry. Markets have been buoyant. A new wave of investors has come into capital markets and mutual funds. We've seen our folios grow, assets grow, and as the economy looks to make a recovery, that is good for equity markets, and that is certainly good for mutual fund NAVs and portfolios. And ultimately, I think we're here to play a very, very long-term game around financialization of assets. Our opportunity is very long-term. And one of the things I like about this budget is it's the first budget that talked about India at 100. I mean, we're finally talking 25 years. And I think, our industry is one that's just at the stage of infancy. And I think the future, India at 100, I think mutual fund industry in the India at 100 looks like a very exciting place to be. So I don't think we're a budget to budget industry. I don't think there's anything adverse for us. As long as India continues to grow, capital markets continue to remain healthy, I think we are a great place for investors to channelize wealth creation.
What is your take on fiscal deficit target of 6.4 set up for FY23? A gradual, we are going towards fiscal consolidation, yeah?
Yeah, so I think people have had mixed takes on this. Some people have said it's at the higher end of bond market expectations, which is why bond markets were upset. I actually don't think so. I think this is a time to prioritize growth. Remember, it's going to be a time when global liquidity comes down. RBI will have to cut down liquidity. and that will have to be replaced in part by government spending. I don't think India has spent its way out of the crisis in the last 2 years. We also have the benefit of higher tax collections, and if we get our act on disinvestment right, if we get this LIC IPO and a few other things done, I think we're okay from a fiscal point of view. I think growth has to be a priority, and 6.4 with a glide path towards 4 in the long term is absolutely fine.
Radhika, disinvestment target of 65,000 crores. First, we had 22, we had 21, we had 2.1, 22, we had 1.75, and now down to 65. Are they being conservative on this front?
Honestly, the target doesn't matter, the delivery matters. And I think there were at least some indications, or I hope so, that the LIC IPO will happen this year. So if we can get that out of the way this year and do a big number this year, as I said, I don't think the target matters. I think the achievement matters. So it's okay if you're putting out a conservative number. The one thing I didn't hear enough about, on a related note, by the way, was asset monetization. I mean, you keep hearing about a couple of specific assets. I would have loved to hear more about that, and see the execution of that, because that was a big element in the last budget.
Yes, last budget led to re-rating of some sectors. Infra, capital goods really saw good momentum. So which are the sectors that you now believe should outperform and go stronger from here?
So firstly, I don't believe that a budget is a driver of sectoral outperformance. It can be a driver of temporary outperformance, but ultimately earnings, shape the way that companies and sectors move. I think the theme around the investment side of the economy and the manufacturing capability is an important theme, but it's not a budget-driven theme. I think the revival of Capex, that part of the economy, those themes, I mean, we've been overweight them in our portfolios for some time, segments like industrials, etc. But I don't think it's a budget-shaped theme. It's just a theme that's accentuated by the budget.
Radhika, when we talk about Capex and the government's focus on, giving a boost to the economy, so we talk about BFSI segment, which relatively did not do well in last 6 to 8 months. So do you expect the banking sector now and the financial sector now to really outperform going forward?
I actually think the financial sector is sort of turning into the pink. If you look at results, both private sector and public sector banks, they are extremely encouraging. NPAs and asset quality, I think, have definitely improved. Credit growth a little bit has lagged, and we have some way to grow there. But it's beginning to grab, and initial signs are it may be beginning to come back. So I think, as I said, finally, results have been a significant driver of market earnings, both public and private sector.
One last question, Radhika. How does a common man investor tend to gain from the budget?
So I think the common man was probably looking for tax sops from the budget, which haven't happened. And I think it's probably, while it's a desirable outcome, I don't think there was too much space to do it. Outside of that, from a personal portfolio point of view, I think your personal budget, your personal asset allocation matter more than budgets. Budgets, of course, sentimentally matter to the markets, they matter to the economy. But ultimately, as an investor, you have a much longer term horizon than the budget. You should really have that 25-year horizon that the budget talked about. I think that's the learning from the budget, and keep focused on your goals and asset allocation. I don't think portfolios need to be tweaked because of the budget.
And where do you see the markets going from here, Radhika, leaving aside the budget?
So this is always a tricky one. I think, earnings recovery for the most part has been okay. As I said, banking's been okay. Some consumption companies are seeing pressure of inflation. So I think if earnings momentum continues to be the way it is, you may have major, minor hiccups as you saw in January. But I think markets are on steady path. I think this will be a year of volatility. I must say that the first half of the year, especially with whatever's happening in global markets, inflation and interest rates. So I see markets directionally okay, but I don't rule out the fact that it could be a volatile year, and you have to be careful. I think there is a regime shift that is happening as we move into perhaps a a rising yield environment. So you have to be careful about the kind of companies you own, the kind of sectors that you're looking at. A lot of froth that was built in because of liquidity. You just have to be a little more cautious.
Thank you, Radhika, for your time and your views on the budget 2022. Thank you so much.
Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.